Hi, my name is Erin Hawley. I'm the Mortgage Loan Officer here at Service One Credit Union, and we hope this video helps answer some of the questions first-time homebuyers typically have. Do I need great credit to get a mortgage? No, you don't have to have great credit. There are guidelines with each lender or each loan product that require a certain credit score. And so if you have that credit score, then you would qualify for a mortgage. Typically, lenders are looking for a 640 or above FICO score. If you are looking at apps like Credit Karma, Credit Sesame, be mindful that that is a Vantage score and not a FICO score. So just know that when you're looking at your Vantage score on those apps, that score sometimes is not the same as the FICO score. To know for sure what your FICO score is, ask a lender to pull that score for you. How much of a down payment do I need? There are actually loan products that do not require a down payment at all. We call those 100% financing. So you may not need a down payment. It's recommended that you have a 5% down payment if possible. That will result in a lower interest rate. You may qualify for 100% financing, so do not let the down payment issue keep you from applying for a mortgage. What are closing costs and how much should I expect them to be? Closing costs can vary quite a bit because part of your closing cost are the amounts needed to set up your escrow accounts. We call those prepaids. When you are planning to buy a home, you can ask your seller to pay your closing cost and prepaids. But if you're not able to get your seller to pay those, you can ask your lender to give you an estimate of those so that you know how much you're going to need at closing. Should I choose a fixed rate or adjustable rate mortgage? That is really a personal choice. Depending on how long you think you might stay in the home, the purpose of the home, things like that will determine which loan product is best for you. The lender should be able to help you make that decision by showing you the different options and explaining the differences between them. Should I lock my interest rate? Absolutely, you should lock your interest rate. Most lenders will not lock your interest rate until you have an actual contract on a house. Once you submit that contract to the lender, they should lock your rate, and you can choose the period of time that you want that rate locked for. It may cost you more to lock the rate for 45 days as opposed to 30 days. But if you know that it's going to take 30 days or 45 days before you're going to close, or the contract date is 45 days out, then you want to choose that up front. If not, you are going to have to pay a fee to extend your rate lock later in the process. What are discount points and should I pay them? Discount points are a way to buy down your interest rate. Sometimes they're very little in cost, and it makes sense to pay those up front to get a lower interest rate throughout the term of your loan, especially if you know you plan to be in this same loan or in that house for a longer period of time. Often, though, it doesn't make sense to pay points because you aren't going to make up that difference throughout the term of the loan. Should I get a 15-year or 30-year term loan? This again is a personal choice. A 15-year term will result in much less interest you're going to pay over the length of the loan, but sometimes that payment is too high. It's important to ask your lender whether or not there's a penalty for early payout. More times than not, there is no penalty. That means if you choose the 30-year note, you could pay extra throughout the term of the loan and possibly pay it off in 15 or 20 years, resulting in less interest. What documentation should I gather? A lender actually cannot require documentation at application. That means that you can provide whatever documentation you would like, but the lender can't require it to give you a pre-approval. The type of documentation they will eventually need are things like tax returns, bank statements, and verification of income. Should I get pre-approved? Getting pre-approved tells you how much house you can afford, and it also tells a real estate agent how much you can afford so that they know what size houses to show you. Most realtors will require that you show them a pre-approval before they start showing you houses. They want to know that when you get to the point of making an offer, that you will also have the letter of pre-approval to submit with that offer. That makes your offer more appealing to a buyer. What is an escrow account? An escrow account is set up on your behalf to hold the taxes and insurance that you're going to pay as part of your monthly payment. And when the taxes and insurance are due, your lender is then going to make those payments for you. This is an added benefit that does not cost you anything. It ensures the lender that you're not going to get behind on your taxes and insurance, which could result in a lien against the property. Most lenders are going to require that you set up an escrow account and pay your taxes and insurance as part of your monthly payment each month. Why does it take so long to close a mortgage? Once you enter into a contract and submit that to your lender, they are going to start the process for you. They're going to order the title work and they're going to order your appraisal. Sometimes it takes 2 to 3 weeks to get an appraisal back. You are also going to get a home inspection. If there are things that need to be repaired on the home, that also may take time for the seller to work with someone in getting those repairs made. Unfortunately, that results in somewhat of a waiting game for you as the buyer. Will my monthly payments change during the term of the loan? If your taxes and insurance change, and they usually do throughout the term of the loan, then your monthly payment will be adjusted. Your lender will look at the taxes and insurance each year and will adjust that payment for you. They should send you a letter in the mail that tells you what the new payment amount is. If you decide to get different insurance, then you should definitely let your lender know so that they can go ahead and look at adjusting that payment for you, whether the insurance went up or down, so that you're paying the correct amount into your escrow account and there's enough in that account when the insurance comes due. What is PMI? PMI is private mortgage insurance. It's an insurance that the lenders require when you haven't put at least 20% down. This insurance is added into your monthly payment and can cause your payment to be quite high, especially if you have not put any down payment down. This is another reason you need to be consulting with a lender who offers many programs and knows what programs charge a higher PMI. What is an appraisal? An appraisal is something that the lender gets to determine the value of the home. The appraiser will come and do an inspection of your home on the inside and the outside to determine if there are any major things that need to be addressed. They will also look at comparables in the area. These are homes that are compared to your home in size and value. Should I get a home inspection? A home inspection is very different from the appraisal. A home inspector is certified to look at the mechanics of your home. They're going to look at things like the age of your roof, the age of your appliances, and determine whether or not there are things that need to be completed. They are going to submit a report to you that is going to tell you a whole lot about the house you are about to buy. I always recommend that you be present at the inspection if you can, because the home inspector can give you a lot of information about that house. They are also going to give you recommendations on things that they think may need to be repaired before you purchase the house. That then can be used to renegotiate with the seller if need be. If you have any more questions or are looking to buy a home, please feel free to reach out to me. You can call me at 270-904-8550, or you can email me at eholley@socu.com. Again, my name is Erin Hawley, and thank you for watching.